Just to confirm, we can see her sec, right? You giving us a chance, honestly, even beyond 2009, right? So obviously, Globally, we know that this pair is the down trend. If you check the structure one, this was a break in structure. This is a global position, not a move. So this was a break in structure, right? This was a low. Let's see. Globally, we came to this point. This is another break in structure. Yeah, so just pick out the utility in there, then it goes structure in here. So this was a break of structure. So this shows continuation to the downside, right? Globally. Then we expected that it should break. We need a close below this area. I also saw that close, so it broke structure again. So GU, it's obvious that globally we see that it's coming down. Then this is the weekly low, this area. And you check when the data is also available. The market has not gotten to this low before. So this is a weekly low, right? Now, if this is a weekly low and it's for it to continue to come downwards, it means that we expect that should come and close this low, right? That's a confirmation that it's going to go lower than what it is today. Now, on the weekly, normally, where would you not look at it? So I'm going to zoom in so that you see it very well. So when you go to this low, right, this is an inducement, right? The first pullback. This area, you will not take a sell in this area, before this area, right? But when it came to this area, you can see that this green candle closed above it. This is not a liquidity graph, so that's why they cannot sell, yeah? So what then happened? Normally, when market has taken out an inducement, you then look for an area to take a sell. This place, for example, because there is another block, a fair value gap, but not this one. This green candle, the one in the middle. This would have been where you bought as the area you'd be looking at for, right? This one, because this next green candle is not typically the previous candle high, right? So now you took it. By that time, this would not have happened, right? So somebody who was trading based on the global understanding was looking at this area. It spiked above this area, then it sold, but it was still going higher, right? So, but again, when it breaks this area, you will not come and sell on this immediate area. So it will give you a little direction, but it will take you out. Because normally, look at the principle. The principle is that wait for an inducement to be taken out to take an entry. If that entry fails, you wait for it to take out an inducement before you trade. So that's like this, right? Very, very unlikely that you just stay back to back and you can stay for. This is on the weekend with the lower time frame. The direction will be different. I'm just saying normally how you trade. So this is what we see on the weekly, right? Now the way it's coming, we don't know, right? Now whether it's coming to break this low or because this is the low on the weekly, this is the weekly high. Over together on this. This is the weekly, this is the range. This is your weekly high. Because if it breaks this low, it's going to continue to sell. If it breaks this high, for example, it's an indication to say that what is happening here is that market has changed. The global structure has changed from being bearish to bullish, right? But if you look at it now, look at it when it's here. So usually, see how you take your entry. You start looking at those key areas up there. Your last, because it's a bearish market, right? You check what's your last buying move, which is this area. That is an order flow, right? we take it above, you see that this other flow has been mitigated, right? So if you are screening where to take an entry, this is what you do. So you see that this other flow has been mitigated. There's a touch, yeah? Your other block is a subset of the other flow. So you use other flow to check, correct? And so when the direction is massive this way, your next other flow that is outside that area is this area, right? Which is from here to this area. This is another flow, right? Now, this area, you can see that it came to this area, but did not touch this other flow up here, right? Then what happened? This is another flow. It didn't get to this area, it started buying, right? If you adjust it to this 2 weeks buy move in here, this one, this area. So why did you take it to this area? Let me show you something. Because this is how you check where market can get to, especially when you're on a higher time frame, right? This is another flow. This other flow, this is also a buying moment, 2 weeks. This green candle and this one. So this one has come into this one, right? So normally, if you want to go higher, you can take out this higher and then come higher. Because this one has gotten there, if you adjust it to this next one, which is from here to this area. Right. So you can see that it came in here and it's coming down. So there's high chance that because it has mitigated an area, and if you check the area, for example, it gives you from here to this area, right? This is an imbalance, right? So you feel it, then it started coming down. So it also tells you that this area is a very good area. So it's coming down. So we already understand from the global position weekly that this is VU is bearish and it has touched an area and it's coming down. So you don't know how far down it's going to come. Maybe it's going to break this area, then it continues to come lower, right? You don't know. We've already picked that from the weekly. So if you come to, so when you're coming to the daily, your concern is between this high, it's not the global structure, it's not, that is immaterial to you. You are looking at the range, right, to analyze your daily. If you come to daily, for example, so what you are concerned about is this high and this low. Whatever happens here, this is the range, trading range on the weekly. Somebody who took a buy, for example, maybe is targeting this area, right? You don't know what will happen. So let's see what will happen on the daily perspective. So on the daily perspective, you also want to check it. At what point did the market change, right? So you don't just pick it this way and be going. This is the leg that broke this structure, this weekly structure. So you want to check, and so that you know what the market prefers, right? So let's say that we want to mark our structure just close to this, so I will catch it when there's a change in character. That's what I want to do. So if you look at this area, for example, this is a valid low, right? On the daily. Why? Because it came back here and took out this high. So it's a valid, so I already know this one. So this is a valid break of structure. This area, this is not a valid break of structure. Why? Because this retracement did not take out any investment. So I will not mark this as a break of structure. Now, if I take this area, for example, and let's see whether there's a break in structure here. So this is a low, this is the inducement, this area is the inducement. I'll just like see what this is your first pullback. Market took it out, so it's a valid low. So on the daily, this is a valid low. Then we'll then check it. Do we have any other low? It came down to this point. So see. So it broke this area, came down. It came down to this low in here, this one. This green candle, this is a low, right? Now, and it went back. This is an inducement, took it out. So this is a valid low. This area is a valid low, right? Which is just lower than the weekly break of structure. So let's see. It then came down and created this area on the daily. For it to be a low, for example, it needs to take out the first pullback. So this is an inside candle. This candle broke out. So normally, this is where this is what was supposed to happen. We expected it that when it comes in here, it's supposed to spike this area, but it's not supposed to close above, because this is the inducement. This is the first pullback. It's not supposed to close above it. This area is doing two things. One is that if it spikes this area, take out the liquidity, we then say that it will come and break this area. When we take it out, it will be a chalk, because this is on the daily. This will be both the inducement, because this area will be both the inducement and also the change in the market direction. So now we already understood it from the daily. From this leg, we see that this is uptrend on the daily, right? That's why I just quickly picked. So let's see what is happening. So it went high. This is where there's a valid high on the daily, right? We got to this area. So this is when it closes above this area, it's a break of structure. So when you see a chop and a break of structure, it means that this is a confirmation that it's going higher, right? So what then happened? It got to this high, it come back, it is not a valid high. It got to this one. So when it got to this one, let me show you what I'm saying. This area, this high. So this is the inducement, this one. But it didn't come back to take it out. So this is not a valid high, right? So the valid high, got to this area, this is the valid high in here, right? So this is the valid high, and what has happened? It broke it. So when it broke this high, it got to this point. This point is not the valid high. Why? This adjustment did not take out any pullback. Then it got to this area. So on the daily, this is a high. Why? So we expect that for this market to go higher. This is a daily high. It needs to take out this high. If it doesn't take out this high, we don't have any confirmation, because on the daily, this is an inducement. We will not buy until this low is taken out, right? So this is an inducement on the daily. And you can see when it took out this one, you see a direction to the upside. That's how the market works. You need to be able to, again, when we're in session, I know some of those smart money concepts, a lot of those inducements, again, we took it in some of those classes, right? Okay, so having understood this is a decision point on the daily. So on the daily, this area, because this is high, it shouldn't have closed below this area. So the fact that it closed, this is a chalk on the daily, right? It tells you that this upward movement market has changed, right? So what has happened on the daily? This is a chalk. You want to get a low, a valid low. So this is a low on the daily. Yes. Why? Why is it a low? Because market has taken out the first pullback. So this is a low. So on the daily, this is the high and the low. If in the coming week, right, market breaks this area. If market breaks down, if it doesn't do something like this, let's say it's coming down here. If it does something like this and breaks this area, we'll wait for it to take out this area. It needs to take out this area, then we'll then sell on this other block. If it just comes down the way it is now, see what I'm saying? If it does like this and break this area, we'll wait for it. This is then the inducement. We will not sell yet. This smart money trading, just selling without waiting for liquidity to be taken out. We will not sell yet. We'll mark this area. If a daily candle closes, just spike this area, but do not close above it, we can then sell. Otherwise, this is the entry. This is where we look for sell, which is the other block after the inducement has been taken out, right? Let's say it plays out like this. But we don't know how it's going to do. If it comes down this way and just break this area, then we need it to come and take out this high. To take out this high before we then take a trade. But the way it is, if you are not in this stage on the daily, for example, you're not trading, you don't have any trade. You wait for it to break this low or whatever this trend is going to make, right? So you wait for it, because this week, for example, it's a demand area, right? A buy momentum can come in here. So you don't know whether when it breaks this area, it's a confirmation that it's coming down. If it doesn't break this area, let's say it does something like this. If it comes to this area, it does something like this. It breaks this area. It takes out this high, it comes to this area, all you know, it can be going higher, right? And when it's going higher, it will be targeting this next high so that it continue to go higher, right? So you don't know. But if it comes in here and breaks this area, then it's a confirmation that it continues to go lower, right, on the daily. And on the weekly, it's already clear that until it breaks this area on the weekly, we don't say it's coming down. But on the daily, we can see. Now, from this that we have done, you can then go to 4 hours, right? So when you go to 4 hours, what are you looking at? You are analyzing 4 hours within the daily range. You can see I'm doing this analysis. I'm not because your daily chart should be a subset of your weekly chart. Your 4 hour chart should be a subset of your daily charts, right? So if we go to 4 hours, the only leg we're going to analyze in 4 hours is this leg. We're not going to analyze anything, which is the daily range, right? So let's see what 4 can do. Oh, so in 4 hours, for example, try this loading. Okay, so again, in 4 hours, this indictment that is daily for daily, you know, this is the chalk in 4 hours, right? But again, I don't want to mark because this, the next step we want to do, we need to be really fast, right? So look at it. So I just want to check the low and just analyze. I'll take out this indictment, right? That's the on this work. So let me just catch the value. This is this area. This is 4 hour chalk, right? That's it. 4 hour chalk was inducement on a daily, right? So that's why when you pick a chalk in 4 hours, you try to check your daily if the daily had closed above below that area or above it, depending on the market structure. If it doesn't, if it was a liquidity grab on the daily, it means that chalk in 4 hours is a fake chalk, right? Market can then go back and continue in normal direction. So this was a chalk in 4 hours, right? So let's see what will be your low. So you got to this low. If this is the lowest point, we expected that market will take out this inducement. So this is a break of structure, yeah? So this one in 4 hours, right? So remember that what we're analyzing in 4 hours is the daily range, right? So we're not just, we already know what the daily is saying. Daily is saying that this market is selling, right? We're trying to see if 4 hours is in agreement. So this brought these are valid. Go to this area, let's see if this is a valid high. This other candle, they are inside candles. So usually I don't try to mark those inside candles. So this is where there was a break in structure. So this area, yeah. So it broke this to this area, right? So this is, we then take it downward. So just tiny movement. Then what happens? Let's see. This low, the diff, it didn't take out this high, so this is not a valid low. So I will leave it, right? We'll come back in here. This would have been a low if this retracement came back and took out this. It didn't. This is like a single line move, right? Then got to this point. So let's see if this is where there is structure break. Let's see. If this is a low, what happened? Yes. This is an inducement, right? This area took it out. So this is a valid low. So the fact that it closed downward, this is a break of structure, right? So when there was a break of structure, this area, remember this is the low of the daily, this one. So what is happening here? It closed above this area. On 4 hours, this is the inducement in 4 hours, right? So you expected that in 4 hours, you will not take a trade until this area is taken. If this area is taken out, you then look for a trade. Where will you look for a trade? The other block above this area, which is this area. So this area, this is the other block. I can see it gives you a direction sold, but again, because market wants to go a bit higher, boom, it went higher. But again, if you are selling, if you are taking a sell here, let's take your entries here. So this area, this is about 67 pips. Depending on what your appetite is, you will have taken partial and you will have taken the position to break even. Because you expected that to come down and break this area. Because in 4 hours perspective, what has happened? Normally in 4 hours, this is a low. So this low, there's a confluence in this low, right? So that's one. Let me take it a bit. So this low is both 4 hours and daily low, right? So it's a decision point. And that's why I was saying that on the daily, I said this is a demand area, right? So that demand area you saw on the daily, it is also this week, the week of this candle, right? So this is a decision point. Why? Because in 4 hours, this is always a low. This is a chalk in 4 hours. In 4 hours, 4 hours is saying that this market, the fact that it's bodily closure above this area, it will go high. But you don't know, right? You don't know whether it's a fake chalk because if you come to the daily, so I want to quickly show you the daily. Once daily and 4 hours agree in terms of the change, then you can then, but on the daily, this is a low, this is a box, right? So look at it. On daily, for example, this is a low, right, from where it was coming. Daily, for example, this would be the chalk in daily. This low, this low, this low. So this is daily chalk, right? But you don't know, right? This is the chalk in daily. But 4 hours, I already told you that there's a change in the market that I just came back to show you this week now. But let's go to 4 hours. Now, 4 hours, I said this is a value low, this is a value low. Market has closed above this area. Market will change direction. So what are you going to be waiting for? This area is then the decision point. If this place becomes a weak high, right? This high, it will then be a weak high. So if it gives you an indication here, if market comes into this area and it gives us a buy indication, it means that we'll be able to take a buy. I'm not saying that you have a trending order here, no. You wait, there's a 15-minute confirmation you need to, it's about 57 pips, except that maybe you don't want to trade and say maybe 0.02, 0.01, just see how it plays out. Let's say you're not trading, you don't want to wait for confirmation. We'll then be targeting this area for a buy, right? This is about 252 pips. So this is the first scenario. So if it aligns and buys to this area this week that we're coming in, it means that 4 hours we already caught it, the market has changed. It's going to buy. If it's buying on the daily, this is where, so when we're buying, on the daily, our buy, we want to see what daily will do here. If daily will close above this area, right? So we're going to be buying on it gets to the decision point of daily. If it breaks above this area, it means that there's a time frame confluence. The daily is buying, there's a chop in daily, there's already a confirmed chop and bullish movement on the 4 hours. Then we can then take a buy. It means that market has changed direction, right? So if you confirm the daily buy, what it means is that this high is now a weak high. We're going for this area, right? We should then, this high, which is the daily high, break it, then it continues to go to the upside. So this is what we would expect on GU, right? So this area is something you need to watch out for. This area. So let's see what happens this area in the coming week. So if you're not in the sell, for example, there's no trade for you here. If you go and put your high in here and say you want this one is, this is, you're just liquidity for the market. There's no, those days when we used to trade and say this is strong support. The market came here, no, it's not support, don't trade there. There's no buy. This indication, this buy you are seeing that is speaking here is going to take you out on stop loss. And that's because it's too risky. Why is this too risky? You have an area just below it where the price is better, right? And you have an institutional reference point in here. So there's no incentive. This one is now, and call it an engineering liquidity, meaning that it's a liquidity before your final point you need to take entry. So this is what you'll be looking at. For GU, I know Caribou couldn't drop EU. Let me just quickly see it. Euro USD. So I don't know if I just check the global again, but maybe because okay, so this is if you look at the overall chart, EU is the same as what's it called? It's the same as GU. It's downward, right? It broke this area. So this is actually the range. This is the weekly range. This is this area and this area, right? So this is the decision point. So let's take it and just check what daily is about. So on the daily, we just want to catch what is happening. So quickly, let's see. We want to first of all see where is the valid low first. This area is very low here, no. Let's just take this area. So this is a BOS on the daily or EU, right? Then this place is a valid low. Look at this one, yes. So this is a valid low. Yes, so this is a valid low. So what happened? So broke this area, came to this area. So let's see. This area, yes, this is a valid low. Look at this. Alright, so then you go to this low. This is the range. Let me check it out. So the weekly range, which is this area. Right? So this is a low, right? So we expect that if you want to continue to go lower, you need to pick out that low, right? So this is the first pullback, right? This area. So this area is inducement. Normally you shouldn't sell before this area, right? So when it took it out, even though there's a bodily closure, what happened? This is your final decision point, right? But why do you think that the market sold to this point? And that's because this red candle did not take out this green candle high, right? So this is actually the other block, this green candle, this one, right? For market, it would definitely take out this inducement. So after it took out the inducement, it would then take a direction to the downside. Otherwise, when it comes in here, it needs to take out this too high. That is sold, yeah? So this is where there's a choke on the daily. When it's closed above this area. On daily, this was where we got the indication that EU was going to the upside. Then what happened? Go to this point, this. So let's see. Where is the high? So this is this high. Where's the pullback in here? I didn't take it out. Oh. So this is where there was a break of structure in here. So there's a BOS in here. Okay. So when there was a break of structure, what then happened? Close above this area, go to this area. So when this place, this is a high, this is an inducement, so this is a BOS one. Alright. So what then happened? This place is a valid high. On the daily, this is daily high. Okay, so this is daily high. This was the previous high. So this is where there's a choke, meaning that market is coming to the downside. Yeah, on the daily. So this is a choke. So what does happen, right? So let's see. If it's a choke on the daily, broke, has it given us any low? The same pattern. So if you are trading GU, EU, they work the same way, right? So you look at it, it's as if it's a GU chart. So this is a low. Now this is low on the daily. But you want it to break this area, right? So you to confirm that to continue to sell this area. If it doesn't break this area, we don't know what will happen. If it takes out this area or closes above it, it can give us a confirmation that it wants to buy, right? But if there's a body closure, it means that you want to sell. Then to sell, We need to then mark the structure and see how far below this area is going to come. So now we already see it. So this is what we're going to check in 4 hours. This leg, right? Which is the daily range. So let's see what 4 hours is showing. Okay, so in 4 hours, let me just pick the daily. This high is same high. 4 hours high is the same as this daily high, right? So, but in 4 hours, this high, there's a pullback before this area, right? So between this high and this high, this is also the chop in 4 hours, right? So there's a confluence. This is also the chop because there are 2 ways you will have marked it. If you mark this internal move, for example, you mark this internal move in 4 hours, this would have been your chop, right? But there's no need doing that because this is 4 hours high. This is a major break of sorts. So you leave it that way. So this is between this high, this is the chop in 4 hours. So let's see. So all those other things that have happened, this one, we're not too interested. This one, I don't need to run with the marking those break of structure. So I will just continue after the chop. So let's see in 4 hours what is happening, right? So when there was a chop, this is the chop. So let's see where we have a valid low. So this area, so this is a valid low, right? This area. Of course, why is a valid low is we already know it, so there's no need for me to overemphasize that. It's a valid low because this is a valid pullback in here. This move took it out, so that place is a valid low. So if this is a low, what then happens? This low is daily low, right? Let's confirm it's also a 4 hours low. Yes, this is an inducement. So this confirms this low. So normally we're not supposed to see a closure above this area. So in 4 hours, the fact that this green candle closed, this one closed above this area. It's a chop, but doesn't look like a comprehensive chop, but it's a chop. You don't need to validate it. It's a chop, but it's coming down. You don't know what will happen, right? So this low, there's a confluence between the daily and 4 hours. It's also a daily low, just the way we had it in GU. So this is this. And if you check in terms of divergence, right? Again, I didn't mark the break of structure up there, but this one, obviously, there's no break of structure here, maybe around this area. Look at this from this place to this next low, and from this next low to this area, you can see that there's a bit of weakness. So that's one thing you also check. Okay, so let's even focus on what we're doing. So the way it is now, you don't know whether it's a fake chop. So, but you are checking. If a 4 hour closes body closure below this area, you will not go and look for buy. But look at what you are checking now. This red candle, for example, this one. This is the overall low candle, right? This red one, this indecision candle, because there's a struggle buyer seller in here. So this area, this is it. But there's also a mitigation, right? This other green candle broke out from that way. This one broke out, and now all those inside candles took out this candle. So this is this area you're looking at, but it has come back here to pick entry and has gone. This other, when you see a candle, okay, don't let me mention it. When you see a candle like this, takes out this inside candle. It's also called an IFC, right? Institution funding candle. It's a very good credit trading statement. It came in here, just picked it, and it went up. But see, look at this area. This week, market has not gotten to this week. So this is where you'll be waiting for it. So if it comes in here, this also a direction to the upside, then we'll take a buy. Our buy, this high will then become a weak high, right? This will become a weak high because if market would go higher, it needs to break that high, right? So it becomes a weak high. If we see any indication here, we're going to take a buy here. This is just a buy. I take it. It's not good to put it just like I give it a bit of breathing space, right? This is about 33 pips. Again, somebody can even trade this depending on the right. There's no risk there. Let's say 0.1. So, but this is trading without confirmation. So if it doesn't break this area, it comes here. So this is about 169 pips, 1:5, right? So this is what we'll be looking at for. If you break this area, this buy is invalid. It means that it wants to come further down. But if it gives you an entry and comes to this area, then our bias has changed. Market is going to the upside, EU. The same thing with GU. Then on the daily, when will you see your change of stock? So on the daily, for example, this is a low, right? So this is, if this is the low on daily, it doesn't break it. It means that obviously all these areas, all this will just be liquidity grab, right? It should just take all these areas. It doesn't break it. If you respect this buy, it's going to come higher. As it's coming higher, these are just the minor areas where you're seeing retracement, but these are then liquidity areas. That is the buy side liquidity. You're going to take everything and bring this high and continue to go high. Right. Again, maybe because of the intro, this is 4:45. We need to round up. Maybe the brother took a bit of time to set the vibe before we started the class. Again, for some of you trade gold, right? Gold, obviously, I know I was looking at it yesterday. So I will just use 5 minutes. I will not spend time on gold because we've done about this is the 4th pair. So this is Forex.com. Wow, you can see that it's gold. Okay. So obviously gold is going to do something. Obviously, this gold most likely will come and scatter out those things off. So it is, if you check it from the global, let's say if you check it from this area, right, where you have a bit of structure in gold, this area. So let's say there's a BOS in here. So this is the global. I'm looking at the global, right? So this area, if I say this is, if I mark this area and say, and let's interrogate it if this is a valid high, right? That's what we're checking. So let me check if this is a valid high. How do we check it? So we'll go and check this high. Where is the first pullback? This is this area, right? So when markets look at it, it came back and took out the first pullback. When it took out the first pullback, what happened? This is confirmed high. Meaning that globally, gold is bullish, right? So this is when it takes it out. Where normally when it takes out this inducement, where are you going to trade? You're going to trade, So if you mark this area, for example, this is your entry. This side, this from here to this place is your order flow, right? So you need to refine it because it came in here and went up, right? So let's say you want to refine it. You take it to this red candle, there's no imbalance, right, between these three candles. So if you take it to this green candle, right, like the green one, take it up here. This other red candle is inside this green candle. You didn't break this, you may not consider it. So this area, there's an imbalance in here. So if you take it to this point, you can see that I just came here and picked entry there, right? And started going high. So when it went high, what happened there? It just tagged this area, took out liquidity and started coming down. So the way it is now, gold looks like there's high chance that gold will come and shatter this area, right? We'll just box this area. Because on the weekend, globally, gold is bullish, right? Gold is bullish. We check it on the daily. Let's say you are checking it on the daily, right? And let's quickly just, not necessarily marking so many structure. Just trying to check very, very fast. Okay, so if you take this one, this is the daily high, right? Take this area. Okay, so daily high, what happened? Broke this area, right? When it broke this area, this is an inducement. So if this is an inducement, this high for daily is the same as the high for weekly. So when it came here, look at it. This is where there would have been a change of character on the daily, right? So which is it? So this is a daily chalk, right? Because this is high, the low between the two highs is that point that should be very expected. It came in here, did not close below it, went up, but came back and then broke it. When it broke it, what happened? Right? This area is a valid low. Yes, it's a valid low. So this place on the daily, for example, this is the daily low, right? Which is valid. So it is, if gold had broken this low, it would have come down very massively, because this is after a chop, you need it to do a break of structure. That's to confirm that it's going to be very bearish. But when it did a chop, this low is there, but will not break it. It's an indication that it could go higher. So what has happened? So this is a low. If this is a low, for example, now, and let's check it as it's coming. Let's see if we can just even mark the high. So this area, it broke this area, got to this area. This is not high, this is just like a single line move. So this is a valid high, this area. So on the daily, he did this. So this was high, broke it, broke of structure. This area, this one, go to this area, go to this area. So this is a valid high. This is this area. So when you go to this area, it also came back, right? So look at it. I don't want to be sure that there's no liquidity gap if it closes above it. So look at what has happened. So this green candle is like a liquidity gap, right? Took out this high. So we can say that this high, if I mark this area, right, I could bring it and say, because the liquidity graph, I can take it to this area, this spike, and say this is a high. But it didn't close above it. So I would say this is a daily high, right? Again, it's also the weekly high. I didn't change the weekly because I just picked that as liquidity graph. So this is, let me say this is high, which is the same. So that only mark two areas. Let me just adjust this line upward. So this is the same as the weekly high, right? So what has happened? If this is the high, this is the high, this is then the low. So obviously, even on the daily, gold, the fact that gold did not close below this area, this would have been the chalk, but it did not do that, right? And it's going high. This gold is going to, if somebody wants to sell gold, nice high risk. See this thing. It's going to take out, it's going to come back here. It's going to take out this is the suspect. It's going to take out this all-time high. Very, very likely. It's very obvious. On the daily, this is bullish. This is high, this is high, this is, you didn't take out this area. So if you go and check it, for example, this is on the daily. Let's even check where is the point of interest in here. Look at this area. This is the lowest, this is the full candle, right? So if you take it to the week, for example, it has been mitigated by this move. You then take it to this move and mitigated it, take it to this high, this candle, right? Because there's an imbalance, so to say, the area of interest. So if you take it, can you see it? The same area as one, if I didn't look at this gold chart, there's no way I shouldn't have picked this buy, because this is it. Very straightforward. This is it. He came in here, he just picked this area. Gold is going to take out this high. Very, very likely. So let me even check 1 hour. Let's see how would I pick this entry. One minute. So you see all those pairs where USD is the quote. A lot of them are going to buy. You see why there's high chance. I don't know if I could even have just a little penny order on GU on that based on 4 hours, and I just allow it. Then I get the confirmation I have additional position. So look at this now. If you look at this low, I'm referring to this. In 1 hour, this low, right? So if I check because this is on the higher time frame POI, you find that gold came here and closed above this area. This is actually the chalk in 1 hour, right? So when it did this, wow, this is a good trade that one had missed. So if it broke out this area there, so what we'll be checking is there, you want to check the confirmation is the break of structure. It came to this area, it didn't retrace. So look at it. This one is like all those things that's happened, this consolidation inside this bullish candle. Look at how bullish it even broke this chalk. It's an indication that we shouldn't start. So you go to this area, go to this point, see this area. This is a pullback. This is the first pullback, right? This area, it came back and took it. So the fact I took it, this is a BOS, this place. When it broke this area, when it broke this area, this is where, see, number one, you have seen a chalk, you have seen a BOS. This is when we would have seen a trade. So what happened? This is also a high in 1 hour. This area. Why is it high? Before it came back, this is the pullback. This area is the pullback. So it came and took this area. So look at our trade here. Between this high and this high, this is it. This is assuming it came back and closing below this area, we say it's reverse, right? But this would then be a chop. But look at what happened. If you take out this green candle, this red candle, I don't want to check if it took out this green candle high. Just 1 minute. So we need to be very sure. Yes. Look at this red candle, it took out this candle high, right? So that's a valid pullback. But if you didn't take it out, it means that it's an inside candle. It's inside this green candle. This would have been a pullback, right? But it took it out, so it's a pullback, right? So when you took out this pullback, you then come and check where normally are we going to. This area, it's like a single line move, right? So, but they are already giving you this high. This is from where we're supposed to be looking at for trade. From this bottom. From here, there's no mitigated area. Pick this area. I'm using this to explain normally how you take trade, right? This place has been used. If you take it to your next order, the order flow, to the last selling move, this area, right? If you even take it to the spike of this, just leave it there. This area, you would have been looking for this area, right? Because there's an imbalance in here, this area. This to this, right? So you're looking at this area. But because it has taken this area, look at it. Once market takes out an inducement, you can go in your direction any moment from that point, right? This is the inducement. So what has happened? When it came here, so let's check it. This is a very strong area, would have gotten a very, because imbalance, order flow would have just come in here, boom, it go. Because it was very bearish, look at what happened. It took out this area. This is in terms of selling move, right? From this high, from this place, we sold to this area, right? This is an order flow, right? Sold to this area. So this order flow in here, if you go and check this candle that is the lowest, it is this candle, this buy candle in here, right? Because normally, if it takes out this area, this is where there's high probability, this area down, high probability. For this area, what has happened? It came to this area. You can see a lot of rejection in here. It came, and the moment it came inside this green candle, it then came and closed above it, this place. When it closed above it, this candle that closed above it would have given us, when it closed above it, either you come and put it here, because now operating above it, this candle would have picked it. But if you want to do that kind of trade, your stop going to be tight. This is tricky. This is gold. Gold is And of course, even though I see that it's going up, it wouldn't have been more than this area because this is your valid exit, which is your high. Because it needs to break this high for it to go high. So it should give you this about 123 pips, right? To be around 1:2 approximately. So if it's not a good entry for you, you then leave it. If you feel that it's not giving you the right thing. But you can see it broke this area and it's going high. This is a break of stock, number one. This is now this area down here is not useful for us again. This one is not useful. Because if it comes back here, it means that there's a change in the market direction. Look at this area now. This is the trading range. This is this area. So this is the decision for this is the last point, right? So gold in the coming week, it will do a bit of consolidation. But when it's coming down, it needs to take out an inducement. So what will be the inducement? A valid pullback. So this is going to be the inducement. This candle, because this is a bullish move, this is the candle that took out the previous candle. So it needs to take out this one. If it takes out this one, it means that we'll then look for an area, right, where we can take a buy. So if you start marking it from where you can take a buy, for example, your lowest candle is this red candle, right? But this candle, market hasn't come in there, but again, it came back and started going up. So you need to look for a candle where you have an imbalance, right? So if you take this candle, for example, if you take it to this area, let's say you're doing refinement and you're watching this area. Why are you taking this area? Because there's a fair value gap between this candle and this candle, right? This other candle. So you can come in here, but gold, again, you can mark your chart and see something different. But the way gold is aiming to take out based on what we have seen on the daily and based on what we have seen on what. So when you are marking daily, go to 1 hour to take a confirmation to trade. If you are in 4 hours, you go to 15 minutes. Based on what we've seen in 4 hours, this is a liquidity. This is a trend line liquidity. In here, all these areas. See. So let me just align it to that. This one. So this is a trend line liquidity. It's going to take out number one. It's going to take out this area. Or this one. This is the first area. It's going to take it out. When it takes this one out, it's going to retrace. So it's going to take it out. It's going to retrace. You don't know how it's going to retrace. Whether it's going to retrace to this trend line somewhere in here. When it's coming back again, it's going to take out this area. This one. So just 1 minute. So that you see, you know how you trade it. When it's coming back again, it's going to take out this one. But when it takes out this one, it will then change, right? Your trade will change. It will take out this one. Then this will then be your entry. If it takes out this one, boom, this way. It's going to come down here. Come down here, right? Because we would have created an adjustment here and then take this one. When it's coming this last time, this is where it's going. So this is the last place. So this is, again, what I feel I'm going to do, again, is very dangerous. If you are even selling gold, you are trading against the trend. Because based on what we have seen here, this is a bullish trend, right? And this is what we expect that gold will be able to do. Do we have any questions? I think that was taking about 2 hours, right? So maybe we'll start with about 1 hour and 40 minutes over when we started. But are we good? Are we clear? So GU, EU, gold. The bias is that there's high chance that it's going to be very bullish, right? US 30, we saw it that US 30 is bullish, right? Yeah. So let's see what the trading week would be around. Again, as we round up this session, let's fund our account, right? Whether it's $20. I know that a lot of people may have traded, may have lost money. That's what trading is. But the thing is that It's a journey. What you can do is, because you have also invested money to acquire the skill, and that's why I'm just so passionate about saying some of these things. It's a business, right? It could be other businesses. Again, you go and check, some business will take you 4 years, 15 years, whatever it is, for you to break even. So it's a business. You have done a capital investment. One is acquiring the knowledge. You have traded, whether you have traded fund and account, whatever it is, you have traded your personal fund, you may have lost money. It's normal. So try, you can now, to tell you why this trading is very important. If you fund your account with 100,000, most likely you're going to get maybe $98. That will tell you that the exchange rate is more than the 1,000 there. So if that is understood by you, 100K, which is massive. Then if you fund your account 50K, let's say you're able to do 50K on Monday, you're going to get only $46. So that you then appreciate the $2 that you make on the market. If you tell yourself, I just need $5, which is very, when you say you need $5, again, you can say with the 0.02, that's just about 25 pips. Again, it gives you very fast. You get that, just close the market. Don't trade again, right? Don't trade. Just be disciplined. Even though it gives you, except that it gives, if you trade with 0.02, you get about 40 pips. You take it, you close maybe 0.1 and take your balance to profit. So that when it replaces it, it will take you back your $5. Then it's fine. Do that for 1 week, that's about $25, right? It's going to, if you do put a withdrawal, immediately you do $25, that you are taking your balance to excess of maybe close to $70. Do a withdrawal for $25. So what you are doing, you're trying to take out your capital. Do that again, grow it in $5. That is, by the second week, you will have withdrawn your capital, then continue to trade. Then don't do a withdrawal, right? Then grow $25 and be doing it. Then you can then withdraw, let's say $50, leave $10. That is the joy that you get, because one of the problems that we have is that we trade, it takes a lot of time. But you have not experienced the joy of withdrawing money to say this is my trading profit. Psychologically, it's an impediment, right? So just do it that way. I want a lot of us on this call, go and, if you know that you don't have an active live account, go and fund it. But aesthetically, just do that tomorrow. You can analyze the chart and say, for example, with GU, EU, and even gold that we have looked at. Even in GU, that buy, because the buy for gold had already activated, right? GU had not activated, right? It's selling. But we already know that it's going to buy. Even though EU is about 33 pips. If you go and do 0.02, for example, and just put 35 pips, if you hit it, that's $7, right? Let's say it's high for you. Do the 0.01. If you hit it, that's about $3. If it doesn't hit you, you're going to make about $12, right? So just trade that way systematically and grow your account. And the funded one is there, but you need to also be trading with your account that you know at the end of the week and withdraw, right? Because if you are doing a funded challenge, you also need to pass the evaluation before you have a live account. So if you don't pass it and you do that 3 times, you get that for those 3 occasions, you are not trading any profits, right? Because you're not making any money until you get a live account and you trade and you just treat yourself not to blow that account, right? But I think that all of us need to fund our account and trade actively. So what I'm saying, so if you do that, there will be a lot